The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 3rd terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Of course, said another way, if you live in your past, there is no future. Think about that. Hope everyone out there is having a great Thursday. Let's make sure we have an extraordinary morning, afternoon, evening. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to throw at us. Right now, we're going to go take a look at the circumstances that the sellers are throwing into the market. We've got the Dow trading up 29 points, but maybe that's going to go red here momentarily. The S&P is up 4 points, but we'll get to that in a moment. I'm absolutely grateful for your presence here, and I'm here to serve you. So feel free to pick up that phone. Dial on at 877-927-6648. Internationally, you can reach out at 727-445-1044. This is Terrific Thursday, of course, Hotel California, sponsored by Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow is trading up 37 points at 16,389. S&P's up 4 points at 1953. NASDAQ Composite, it's in the red. It's off 7 points, trading at 47.43. Russell 2000 slightly red. We'll call it flat, trading at 11.45. Gold's back $10. Silver's off 2 pennies. Lightspeed crude up 44 cents. Lead the charge here to the upside. Lannett Inc. LCI is a ticker symbol up nearly 12%, $5. Methode Electronics, perhaps that's up 19%, $5. Allegren is flat. Why is that in second place out here? Very interesting there. Grief Inc. is not having very much grief today. That's up 17%, up about $5 to the downside. Looks like Calavo Growers Inc. down about 11% off $6. Looking for something. Regenerative Pharmaceuticals off $7, looking for something other than an ETF. Ambarella having another terrible day out here, off 7%, down 570. Okay, so where do we begin? So what's going on inside the markets as we speak right now? Markets had been up. The Dow had been up maybe about 200 points or so. You're up 35 points right now. It's really all about the NASDAQ. Let me show you, the pattern that took place out here a little bit earlier. We're going to look at a 30-minute chart just so you can get a feel as to what's going on. Coming off this hammer candle that occurred right here, this was at 11 o'clock. This was on September 2nd. So that was yesterday, 11 o'clock in the morning. Coming off of that hammer candle out there, if we take a look at our wave counts to the upside, what you'll see is earlier today at about the 9 o'clock time frame in the NQ, is what I'm referring to. After we had that nice spike, I think that was courtesy of Super Mario Draghi out there. We saw the market spike higher. Now, the ES, I believe, took out that spike. The NASDAQ did not. That was kind of an interesting clue out there when really the NASDAQ is going to be the indice that's going to drag things up and or drag things to the downside. As it was doing that on a 30-minute chart, the NASDAQ, not only did it make a seventh wave move to the upside, it also was moving higher with what? Less relative strength out there. Never a good thing when it's followed up by a bearish reversal signal. Remember, the market's participants, the buyers and sellers, have only one role to play for you and I, and that is to paint signals. Paint signals at the beginning, at the end of moves out there. And it's really important that you understand their message. Imagine going to, I remember the first trip over to China. And, these were days where you didn't have cell phones. You had, at best, a dictionary, at best. Try getting around, without an interpreter in a country where you don't understand the language. Try navigating the stock market charts without understanding the language. It's really important in both cases to be able to do both. Now, today's day and age, you've got cell phone technology, computer technology in the palm of your hand. It's much easier to travel. All this great technology, it's actually easier for us to understand what the markets are doing, but you still need to be able to understand its language. So what do we see taking place right now? We saw that price here had this little bearish engulfing candle as well at about the 11:30 time frame, got back below its TAS market profile. Now you're below the support level on the 30-minute chart. So you're below the support level on the 30-minute chart. Let's just flip over and take a look at what's going on the 120-minute time frame, because what you and I are trying to identify is price here breaking through support levels. Well, guess what? In the case of the NQ, the answer is no. Where the market is likely headed to at this stage, our best gauge as to where price is going to head to is around the 42.24 level. And as it gets there, either that acts as support, or if it does not, then what we should anticipate is price moving down in between 41.75 to 41.99. So, on the 30-minute chart, yes, we've seen a break of support. Take a look at that bottom, that was formed down here, a seventh wave at about 4 o'clock in the afternoon. This was September the 1st out there. That's why, and with less relative weakness, I believe we took a look at that yesterday. These patterns, they work on all time frames. They work on all charts out there, and there's something that it's one method for the market to communicate to you and I as to what's going on. So that's with regard to the NASDAQ. As long as we took a look at the 120-minute time frame charts, let's switch over. Let's go take a look at Stevie's stacked charts here for the 5-hour chart, the 300-minute time frame. In this case, we can take a look at both the S&P futures. That's at the top panel of my screen, the NQ futures at the bottom panel. We can see both of these in only a third wave to the upside out here. We can see that it's possible that these markets could find support right here, right now, because price is pulled back to the top of its TAS market profiles. Those are the red dashed lines going across my screen. So right here, right now, as we speak, at about the time frame of 113, you don't know any more than I do whether price will find support. But if we're wondering why price were to find support, well, here we know. So, again, we just kind of go step by step by step to understand what's going on inside the markets. So that's what's happening on the short-term basis, and we have ranges as to where price could or should or would fall to if, in fact, these levels fail to hold as support. Now, let's go try to understand what's going on between the net advancing issues in the market or net declining issues. I don't know which they are. Let's go take a look at it. As we take a look at the New York Stock Exchange and the NASDAQ Composite. So here we're taking a look at a little something different. This tells us that it is buyers that are in control. So what the market has done, if we're going to go ahead and interpret, it's digested some of those gains out there. Look, we have markets that are whipsawing in both directions and with a large degree of range out there because of all of last week's action. So it's nothing right now for the S&P futures to sneeze and move 20 points in one direction or the other out there. It truly is a intraday trader's paradise as long as you're willing to go ahead and take that bread off the table. If we take a look at the New York Stock Exchange right now, and you can see I've got two yellow lines on my chart, a plus 150, a minus 150, the bottom panel out there. Those are areas that help us to identify extreme oversold or extreme overbought conditions. We're not there right now. It's really that green line that you want to pay attention to. So the wider swath of the market, as you and I speak right now, quite frankly, is more bullish than it was on the trading session of August 28th. I say that because when I take a price is not above August 28th, but the price oscillator reading is when we take a look at advancing and declining issues out here. So long as price stays above this zero line, and I don't know whether it will or it won't. We'll know at 4 o'clock today. But what we've got to go with is the information that we have at this moment in time. And as we speak right now, it's actually the buyers that still have control of the market. Where is the New York Stock Exchange headed to, assuming that buyers can resume control today? 10,256 to be exact. That is the B point of a potential A to B equals CD to the upside. This market's got potential A to B equals CD patterns to the downside as well as to the upside out here. That's what's going on inside the New York Stock Exchange. If we take a look at the NASDAQ composite, which the NQ had changed, should turn to slightly red. Well, guess what? If we take a look at the NASDAQ composite, it is still the buyers that are in control of the market. Now, what the NASDAQ has done, and we'll go switch over, we'll take a look at the Qs. What the NASDAQ has done thus far, it's tested that August 28th swing point. It's gotten into the low of that bar, 47.88. You're not trading in it right now, but any close above 47.88, well, one, the price oscillator is going to continue to be above zero. In fact, it's going to end up being higher than the high of that oscillator reading from August 28th out there. And that says that the high of 48.36 would likely be tested. And potentially, price could, in fact, make a move above that. Now, look, coming off of that low that we had last week on Monday, all the way up to the high that we had out here on August 28th, if we just simply take a look at a retracement ruler, all that the composite has done is a dead cat bounce to the downside. All that it has done is a 0.382 retracement to the downside. If somehow, and I can't tell you how, I don't know whether it will or it won't. What I can tell you is if that 48.3678 level gets taken out, you're going to see an A to B equals CD. That's going to make you say, where did that come from out here? Number one, only a 0.382 retracement out here. So, again, who's in control of the market as we speak right now? It is still the bulls when we take a look at the NASDAQ composite. Let's go take a look at the Dow. With the Dow here, which has been the black sheep of the family out here. Why do I say that? Well, because its price oscillator up until today has been below zero. So the interesting thing, as we speak right now, doesn't have any meaning necessarily at 118, other than a gauge of where are we at and what's the market doing right now. Price oscillator is above zero. If we have all three in unison out there, it'll make for a nice harmony inside the market. Nice enough harmony in the market to anticipate that what the market will do tomorrow as well is move higher. Tuesday could be a different story out here. But at this stage here, if in fact the market were to close right now, if we just shut it down at 118, and I'm all for doing that if you'd like. We can do that. We can pack a nice little picnic basket. We can go out to the beach. After all, it is towards the end of summer. I'm game for doing that. And if it were to end right here, what you and I would know is actually the buyers that are the ones in control of the market. So we know inside the futures area, we know that price is moving back into a level of support. We know as we take a look at the wider swath of the swath is a new word, I believe. Maybe swath is actually a word out there. But the wider swath of the market is telling us that the Dow is in the hands of the bulls right now. The NASDAQ is in the hands of the bulls right now. And the New York Stock Exchange is in the hand of the bulls. And all of that in spite of heavy headwinds. I mean, if you and I were flying this plane right now, let me tell you, I would be the pilot, and I would make it mandatory for you to wear your seatbelt out there. Why? Because as we take a look at the euro, Japanese yen, one of the unintended consequences of Mario Draghi comments by the ECB is we've seen the euro-Japanese yen currency pair move down also to a level of support, that 133.10 area. If that breaks, it'll be a very, very, very bumpy ride. This is Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We got the Dow up 53. S&P is up 6. We're telling some funny jokes inside the Tiger's Den out here. During the next break, I'll post one in there. It'd be maybe questionable whether or not I could actually say it on air. I'll let the folks in the den let me know. Maybe I'll clean it up just a tad out here. But maybe some of you have heard it before. But let's get back to the markets. There's no joke when we take a look at the market. So at this stage of the game, we're seeing the markets bounce a little bit. Of course, you and I, we just simply said, hey, we're agnostic as to which side of the market that we're on. We're just simply looking for signals for the market to tell us which side it is on out there. That's really the role that you and I play. What you and I do as pattern recognition, specialists, experts, whatever we want to, whatever adjective we want to go ahead and describe ourselves as, what we do know is that these markets repeat these patterns over and over again. So when we took a look at that 30-minute chart and we saw that spike up, we saw a seventh wave, we saw a bearish reversal, we saw price go ahead and close below a market profile resistance level. For those that are day traders, look, you don't know what's going to happen next, but you do know, knowing what to do and doing what you know are two different things out there. And so that was a time to go ahead and take some profits inside the market. With regard to what else is going on, let's go take a look at Goldilocks out here. If we take a look at gold, she's trading back about $8, 11.24. She's off of the session low. So far, we've seen gold trade down to a price point of 11.21. So you're up $3. Big deal out here. What gold is doing, let's go take a look at some retracements out here. retracements from the low of the trading day of July 24th up to the high out here on August 24th. So it took 30 days to go from low to high. What we can see is that prices below the 0.382 retracement. Pretty darn good chance at this stage of the game that what Goldilocks are going to do is get down into that 1110 area. And therein lies the problem. Because if, in fact, it closes below the swing point out here from the trading days of August 26th, the low was 1116.90. Yeah, we'll call it 1116.90. I don't have the volume. We'll switch over and take a look at the GLD for you because it'll have a similar pattern setup. But if, in fact, gold closes below that, then you're looking at an A to B equals CD to the downside. And it won't stop at 1110. It'll head its way down into the 1094 area. That's what's going on inside gold. Now, we'll switch over to the GLD in a moment. If anything is going to stop the decline in gold, though, you and I yesterday we took a look at gold priced in 4 different currencies. We looked at the South African rand, we looked at the Japanese yen, we looked at the U.S. dollar, we looked at the euro. It's my premise, it is absolutely my premise, and I'm convinced of it, that gold priced in euros means a heck of a lot more than gold priced in anything else. In fact, let me put this chart back up on the screen. Let me just go ahead and shut off the price of gold in U.S. dollars out there. And we'll just take a look at the euro chart. And that's what we're looking at. We can see nice little descending trend line out here. That little yellow line on my screen. If I pull this back a bit further, you'll see all kinds of trend lines out here. Well, maybe you won't. Why is that? Why is that? There we go. It starts to fill up. So we can see nice little rising price channel out here where priced, again, this is priced in euros. If, in fact, gold were to close below 1,000, actually, it really shouldn't be at 1,000. I don't know why that line keeps getting knocked off the spot out here, but let's try this. I don't know if it's going to show up in red. There we go. 999. Okay, we'll call it 1,000 euros out there. We can see clearly how this acted as resistance. Again, broke above it. That was your breakout. Price has come back to the breakout area. It's just really hanging out here. Now, what gold did in euros this morning was it came right down to a level of support. We can see that it's bouncing up, and it's trying to. In fact, what it has done today, it's gone from between a support line and a resistance line. Look, this is so subtle. And if you want to trade gold or you want to trade the miners out here, look, I'm giving you a gem. This is a holiday gem. Okay, this is a big TFNN bonus out here because you're not going to find this bonus anyplace else. My hypothesis, my conclusion is if gold in euros can break above and close above that descending trend line out there, that's going to be your early signal that actually the coast is clear and gold and U.S. dollars ought to move up as well. Maybe this sets off a bit of a recognition wave if, in fact, we see a break of that trend line. Whereas if we don't, we know that price came right down into that support of gold priced in euros. If it can break that level, then what happens is gold moves down to the bottom of that rising trend line. If that thing fails, then we got to take a look at a whole nother scenario out there. But at this stage, this is what we know. So it's so much easier now when we take, and imagine if you were not paying attention to that and you were only looking at gold priced in dollars, it's like having one hand strapped behind your back. And we could probably go into a whole nother set of jokes with, things with one hand strapped behind your back out there. I want you to have all hands on deck. I know that's why you listen in here at TFNN. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go finish off this gold analysis out here. GL, what the heck is going on? What is going on? GLD. There we go. We'll punch that into the system, and then we'll go ahead and get some kind of volume scenario. So what you're really looking at here, you've got the swing point from August 26th out here. I guess I need to put the volume bars on my screen. That would make it a little bit easier since we're going to do a little volume analysis. So on that trading session, you had the GLD trade down with 10.8 million shares. The very next trading session was 8. Now today you're down with lighter volume out here. And ideally what you'd get is you'd get a move below this level here. Remember, in order for that to happen, we're likely going to see a couple things occur. We're going to see gold priced in euros fail at its support level. So we're just anticipating both sides of the trade, right? We know there's a recognition wave that ought to be set off inside the markets if, in fact, gold can get above that descending trend line. And if it can't, and there's a market, we always got to take a look at both sides of the trade out there. You just look, you don't have to do anything you want, but you really should. I implore you. I ask you to always look at both sides of the trade. And where do you learn that? You learn that's the most basic. That's the most basic principle that each of us learn in owning and running a company. Look, in this business here, most of the times, you are one man, one woman operation out there. But in any business activity where you've tried to go out and get clients out there and you've prepared for a meeting, whenever you've prepared for a meeting, the question that you need to always ask yourself is, what did we miss? Right? So if you are on the bear side of the market, you need to figure out what is it that you missed. If you're on the bullish side of the market, you've got to figure out what is it that you missed out here. After all, how is it that you can identify when the game is actually lost with regard to your trading strategy out here? Well, look, in the case of the GLD, if it takes out the August 26 swing point with volume, that's more than 10.8 million shares, you'll see an A to B equals CD to the downside. Good news is the GLD is pulling back with light volume. Good news, price found support in the euro, priced in with gold priced in euros out there. So you got two levels of support. That would suggest to me, at least, that gold's not going to go ahead, at least today, it's not going to go ahead and break that August 26th low. But if it does, then what you can do is take a look at an A to B equals CD to the downside. So hopefully that assists you in your trading. Now, to the two jokes out here. We'll see. I've never told a joke on live air. But you know what the heck? It's Thursday. It's Sleepy Thursday out here. What do you call a sleeping bull? You call a sleeping bull a bulldozer. That's why, folks, even if you see the markets are moving down or what have you, don't beware of that sleeping bull, because I do not want you to get bulldozed out there. Always look at both sides of the trade. Now to the bear joke out here. The bear joke goes like this. A man wakes up in the morning on Wall Street. I posted it then. I've changed it just a tad, to find a bear on his roof. So like any unsuspecting individual, what would you do? You'd open up the yellow pages, right? And sure enough, inside the yellow pages, there is an ad for bear removers out there. Imagine that. So the bear remover, he talks to a guy, calls him, bear remover, says, hey, I'll be there in 30 minutes. Bear remover, he shows up. And he shows up with, he's got a ladder. Of course, you don't have a ladder because it's on the roof. He's got a baseball bat, a shotgun, and a mean old pit bull. Of course, the Wall Streeter says, what are you going to do with these? He says, well, first, I'm going to go ahead and put the ladder against the roof. I'm going to go ahead and climb up on the roof, and I'm going to knock that bear off the roof. I'm going to do it with that baseball bat. And when the bear falls, my pit bull is trained to grab him by his cojones. That'll go ahead and that'll subdue him so that we can go ahead and put that bear inside the bear trap inside of my cage that's in the truck. So he hands the shotgun to the homeowner, and the homeowner says, what's this for? He says, if I get up on the roof and the bear knocks me down, shoot the dog. I don't know how good it was at telling the jokes out there, but it is. We're just having a little bit of fun and humor with you. Maybe, David Letterman, Johnny Carson, they weren't shaking in their boots when it came to Stevie's son out here. Okay, back to the market. So we took a look at gold. We took a look at, what was going on inside of the futures markets. We haven't done is we haven't gone to take a look at what's going on inside of the ETF structures out here. Let's go do that. Let's go take a look. Qs are trading down just a tad. So let's go see what's going on inside the Qs and what the levels are that you and I need to be paying attention to today. If we take a look at what the Qs are doing, one of the things that they did yesterday was they tested and rejected a swing point with volume. And that was a swing point from the trading day of August 24th. Of course, we know that had a volume of 150 million shares, and yesterday was a test of that level with 43 million shares. As long as the Qs can stay above 102.53, they ought to go make it to the next level. Now, the next level inside of the Qs, which it's already tested today, so let's go take a look at volume there, is the August 28th swing point. The low of that is 104.85. The volume is 49 million shares. You've done 26 million shares. You've got 3 hours worth of trading, right? Not even 3 hours worth of trading left. So you've got 2.5 hours. I don't think it's going to be moving into that swing point with volume. Nonetheless, if in fact the Qs trade above 102.53, what you and I should anticipate is at least a test of that swing point, at least the low, 104.85, and most likely the 106 area is the top of that swing point. That's what's going on inside of the Qs. If we go take a look at what's going on inside the small caps out here, now, in fact, let's do this. Let's go take a look at this. Let's go take a look at the Dow, the diamonds. What are the diamonds doing? Well, let's take a look at what the diamonds also did yesterday. Its swing point high from August 24th, high volume for sure, 35 million shares out there, is priced at 163.45. Talk about subtle. The actual closing price yesterday was 163.46. Hey, folks, that qualifies as a test and a rejection of a swing point that had volume. You can't bust them down. What do you try to do? Well, in this case, you try to bust them up. Where's busting them up? Well, it's really not that far higher, right? It's that August 28th level. Inside the diamonds, it's got 8 million shares. You've done 4 million shares so far today. The low of that is 165.24. You've been up to 165.49. So now we got a test of that area. Maybe we're just simply going to be oinking and banging around here, you know, in this very narrow range. But if you can't bust them down, you ought to see price try to go bust them up again tomorrow. Any close above the high of August 28th out there, 166.62, is going to set up a deeper retracement and or maybe even an A to B equals CD to the upside out there. If we take a look at what's going on inside of the small caps, the IWM, let's go see what it's done today. So far, it's trading basically flat at 113.96. It has tested and rejected the swing point from August 24th, meaning it actually tried to get over it. It couldn't. It's trading right back below that high of 114.92. It needs to close above 114.92. If the IWM can do that today, along with the Dow Diamonds, along with the rejection inside the Qs out there, that would be pretty impressive. And if we go ahead and finish this off and take a look at the spiders out here, the SPY, that's trading up 43 cents, 83 million shares today. The spiders are trading right at 195.84. They're actually 195.85, so 1 penny above that. In this case here, you've got light volume. So if the SPYs can close above 195.84 today, because it's 507 million shares on August 24th, and let's assume that the Qs close somewhere right around here, which is above that level, and the diamonds, you're going to have 3 of the 4 ETF structures that will have rejected a swing point with volume to the downside. That'll tell you there's not enough to bust it to the downside. But here is the key. Busting it to the upside is not that much further up, folks. So we want to pay attention to those areas. In this case here inside the SPYs, that's at 199.84 out there. So that takes care of that. We took a look at the euro Japanese yen. Never a good thing. That's why it's going to be such a bumpy ride here. But that also moved down to a level of support. Let's go check in on a couple of these stocks out here. Let's go take a look and see what's going on inside Johnny Appleseed. If we take a look at Apple out here right now, trading out at 110.58. What has it done out here? It's trading above the August 24th level, so that certainly helps out the Qs. Where could Apple be headed to out here? Let's see, it was pushing earlier this morning into that August 31st level. 56 million shares, you're up with 34 million shares. Not too bad out here. What the Apple needs to do, otherwise it'll be a real drain on the marketplace, is stay above 108.80. That happens to be the swing point high from August 24th. Of course, we know we got that major bearish reversal signal out here in Apple, that island top. That took place back on July 20th and 21st. It actually took place because of the candle sessions on July 17th and July 22nd, setting up that island. If we take a look at Microsoft, let's go look at Microsoft. 15 million shares, up 22 pennies as we speak. What do we know about Microsoft? Microsoft has rejected a swing point that has been tested a few times. That's a swing point from February 2nd that had 50 million shares. It was tested with 37 million shares back on April 2nd, and then voila, tested with 88 million shares. So it was tested with some major volume. 88 versus 50 million shares out there. Says at some point in time, perhaps Microsoft will get down and visit that area. When would it decide to do that? Well, it'll decide to do that when it closes inside the trading session from August 24th, which it has not, as we speak right now, done that. That is at 43.31. You're trading at 43.57. If we go take a look at ExxonMobil, trading up 62 pennies. That's with 8 million shares. ExxonMobil has gotten back inside its range out there. Its range, you may say, what the heck are you talking about? Well, what I'm talking about, if you look at the monthly chart, you're going to see a nice little rising price channel. In essence, that takes us back into the time period of July of 2002 out there. So a long-term rising price channel. Price tested that last month. It has rejected it as we speak thus far. ExxonMobil looking from a stock chart perspective better than Chevron, which is trading below that same little rising, not little, but trading below that rising price channel. In any event out here, you know, if there was good volume from a monthly standpoint. Volume last month inside ExxonMobil, 387 million shares. But back to the daily chart, so we know what those lines are that show up on my screen now. We got to get rid of that little chartreuse line, though. That midpoint, I'm not that interested in it. So we're going to go ahead and just hit the old Zapparoonie. And now we don't have to deal with that. But as we go back and take a look at the daily chart, just to get a feel for what ExxonMobil is doing out here, ExxonMobil, a lot like the general market, not doing a whole heck of a lot, but testing its swing point from the trading day of August 28th. That has got 19 million shares. You've done it with half the volume. You've done it with actually less than half the volume, 8 million shares so far today. But any close inside of ExxonMobil, inside of 74.41, you're at 73.89. That says you'll go up and test the 75.98 level, volume or not. If we take a look at some of the equities inside of the GDX, inside of the HUI, the XAU, let's go take a look at Rand Gold Resources, GOLD out here. When we took a look at that a few days ago, I believe, we noticed that it was testing that swing point from July 27th, which has 1.2 million shares, and we noticed that it was testing it on light-ish type volume. Nonetheless, you are trading below that level, which is 59.67, and that says price can easily get down to go test 57.06 out here. Light volume, yes, 487,000 shares going against what is 1.2 million shares, but you're inside that swing point, so you have not seen any kind of rejection. Expect or anticipate that Rand Gold will go down and test that low. If you can do it with less than 1.2 million shares, that may be your buy. If we go take a look at Agnico Eagle, AEM, let's go see what that's trading into. If we look for the swing point out here, we got to do a little bit of delving down in there. Let's see. That low is 2107, 2110, 2108. We've got the low. So let's go ahead and put the anchor point on that, and that says that that's at $22.08. At 2208, which had volume of 2.4 million shares, it was tested with 5.4 million shares on August 26th. Not necessarily a good sight out here. Price likely, because it's trading into that August 26th level with light volume, 2.6 million shares, but it's trading below 23.83. That says you likely get back and test 22.08, and that is inside Agnico Eagle. Take a look at Barrick Gold off 18 cents with 13 million shares. Let's go see what it is doing out here. It has a swing point low that takes us back to where? Well, we'll just take the August 5th level, and let's go ahead and put a line on the bottom of that. That's got volume of 18 million shares. You're back with 13 million shares today. Not a good scene. In fact, you are trading below. Well, I don't think I grabbed the right spot. Let's make sure that we grab the right spot out here. I think it caught the body versus the wick, right? The low is 652, and you're at 650. Well, not a good scene for Barrick Gold. In fact, not a good scene for the XAU out there. I believe Barrick Gold's one of the top 5 holdings inside of that indice, inside of the GDX out here. So if it closes below 652, it doesn't look like it's going to do it with volume. Although maybe even that's a toss-up because you're at 13 million versus 18 million. If you close below with 18 million, it does not look good. I mean, well, even if we come to this small ETB, that's 29 million shares, at least on August 26th. So maybe you could use a benchmark of that. That's also 652, though. Something to think about. This is Steve Rhodes with TFNN. We got the NASDAQ. She's still slightly green. Well, everything is green out here. I'm not green, though. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So we got the NASDAQ Composite off 10 points right now. That's the what's getting hit the most. Well, they're really all getting hit, right? You had the Dow up about 200. It's only up 25 points as we speak right now. Quick peek in on the summation index out here and the price oscillators Dow back below zero. Not the case with regard to the New York Stock Exchange and the NASDAQ Composite. So it's going to be an interesting close of the trading session today. What did we overlook out here so far? I think we've covered the ETFs. We've covered at least Goldilocks for you. Light sweet crude, let's go take a look at it. Trade out at 46.41. That's up about 17 cents right now. You know what light sweet crude is attempting to do is to make an A to B equals CD pattern to the upside. I don't know why that tool is not turned off. What it needs to do in order to do that is to get above the trading session from August 31st out there. 666,000 shares. So you got the devil hanging out there. If, in fact, oil, light sweet crude, black gold, Texas tea can get above that level, it would be nice. I would give you the A to B equals CD, but why is this not There we go. There's your your E point again being August 31st, your C point being yesterday's low out here. You'd end up with a Gartley sell pattern, a potential Gartley sell pattern. So if in fact gold line, light sweet crude can get above 49.33, that's the magic number. If it does that, it'll be on its way to forming at least a 1-to-1 A to B equals C to the upside. That would take it to 54.79. If it can do that, that also happens to be a 0.618 retracement off of the high from all the way back here on the trading day of May 6th. That would be your next potential sell pattern out there. It all depends on how that level were to be hit, what size bar that it is, what kind of volume is behind the move, because you can also suggest or state that if it's coming into that area with a wide-ranging bar, some good volume, what you'd be looking at is move up more like to the 58.96. That too would be a Gartley sell pattern. You don't know which one, if either, is going to form. What you can just simply do is anticipate and plan that trade ahead of time. Now, that pattern comes off the table if you were to see light sweet crude close below 43.21. So the assumption is, as long as light sweet crude does not do that, that's the pattern that it is trying to form out here. And let's take a look at the current contract. And this one is interesting. This one is very interesting. And that is copper. Copper has been slammed. It's been damned. It's been everything that you can think of, with the exception of it's actually broken its downtrend. If you take a look at copper, this could be another pearl out here. If you take a look at copper out here, you can see that just simply coming off of the May 18th high, and we're taking a look at the current contract, the December contract, guess what copper did on the trading day of August 27th? Well, nobody was really looking. It broke above a trend line. And guess what it did for 3 trading sessions thereafter? Came back and tested that trend line. That's what you like to see a market do, no matter what it is out here. And now you're trading above a B point of an A to B equals CD to the upside. And that's the swing point from August 28th that had 59,000 contracts. Looks like you're about 46,000 contracts a day. So copper on its way to forming probably the first A to B equals CD to the upside that anyone can find in a long, long time. That says copper is on its way to 245. I would make the case that more likely it's on its way to 249 to 255 out there. So copper, not the it is a shiny metal, but not a precious metal out here, base metal, right? That actually has turned. And that is very interesting. So we're going to have to leave it there, folks. Have a terrific Thursday. I believe that David White is off for the day, so probably a replay of one of the shows. Of course, we got Tom O'Brien. He'll be in from 3 to 5. And then Andy Heck, in the words of Dave Mason, he'll go ahead and bring it on home to you. Have a great Thursday, folks. We'll see you tomorrow afternoon.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.